UiPath stock has been one of the bigger disappointments on my list of stocks to buy. I've had UiPath stock rated as a buy for a little over a year now, and the stock has disappointed meaningfully in that time. It's already down in 2025. And so I wanted to revisit this stock and update you on this recommendation, give you more information on this business, why it's underperforming, and answer whether or not I still think it's a buy or if I'm downgrading to a hold or even lower. Let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Right, so one of the reasons among many that UiPath has underperformed is because the company's revenue growth rate is on a steady rate of deceleration at just 9% in the most recent quarter. UiPath's revenue growth has dipped below double digits. You can see just 2 years ago, this company was growing revenue at over 20% year over year every quarter. And so the decelerating growth rate has investors concerned. What's more is the reason for the deceleration. Artificial intelligence and other agentic AI service providers are threatening to take significant market share away from UiPath. And so that prospect has UiPath under pressure, under increasing scrutiny from investors. Still, one of the things UiPath has found great success in is in improving the company's operating profitability. At negative 13%, its operating margin has improved drastically from a couple of years ago where it was negative 40%. In the current fiscal year, management is forecasting nice improvements in operating income. This is especially true as the founder has come back and taken the helm as CEO. However, that leadership disruption is another reason why UiPath stock is down so much in the last year. The founder brought in a CEO to take his place, and then just after a few short months, took back the job as CEO, forcing out that other CEO he hired to take his place. So investors rarely like that kind of unplanned leadership change, and that's been the case with UiPath. Because of that unplanned leadership change, investors were concerned about the direction of this company. Where is it headed? Do they know where they're going? Do they know what their future looks like? Or are they just making decisions on the fly? And those are concerning, understandably, for long-term investors. Similar to its operating margin, UiPath has done a great job improving its cash flow. It's up to a 23% cash flow from operations to sales number, and that's up hugely from negatives in late 2022. So this inflection point of becoming cash flow positive and becoming cash flow positive so quickly with such a high margin means the company is now a lower risk. Whenever a business, a growth business, hits that inflection point where they become sustainably cash flow positive, it removes a big risk because now they don't need to ever go back to investors and ask for more money. They can fund the business on their own. If there's an opportunity to go to investors and raise capital at low cost, they might do it. But they don't need to. And that's the beauty of it. When you become cash flow positive, you can fund the business operations internally and opportunistically reach out to investors to raise more capital should there be an opportunity for growth or an acquisition or an expansion. If you can raise that capital opportunistically, you can do so. And you can do so at a lower cost because you're now generating cash flow yourself internally. So with its return on invested capital, you see the same story here, negative 4.8%, but improving dramatically. So it's really a tale of two stories here with UiPath. On the one hand, the company's revenue growth is decelerating quickly, and concerns about competition and substitute technology have investors worried about its revenue growth prospects for the next 3, 5, 10-year periods. However, On the other side, you have a business that's achieved a huge inflection point in turning cash flow positive and generating healthy cash flow margins and free cash flow, improving operating margins, improving return on invested capital. It's a founder led business, even though the transition has been uh, choppy, to say the least, the back and forth between an outside CEO and the founder taking the lead as CEO. Is that a permanent thing? We still don't know. Or are they going to search for another CEO to come back? So those question marks are not good. But the improvements in margins and cash flow are very good. So now let's take a look at valuation. UiPath, whether you're measuring on a forward price to earnings or a price to free cash flow, it's around a price to free cash flow of 22 and a price to earnings forward of 21 and a half. Both the cheapest this stock has traded for in the last 3 years. So you're getting the stock at, according to these valuations, the cheapest that it's been in 3 years. I also did a discounted cash flow valuation for UiPath stock, and I found the intrinsic value to be worth around $20 a share. And the current market price is $12. So when I look at the DCF, it also looks undervalued. So whether I look at my DCF or forward PE multiples and price to free cash flow multiples, the stock looks undervalued. However, I will highlight that UiPath is one of those situations with a greater degree of risk of being or looking like, and it could be a value trap, which is companies that look like a good value based on these metrics, but it could be a trap because their future prospects don't look good. Their future prospects could be declining. However, I don't think that's the case. I don't, I think there's a probability that it is a value trap and the price will not respond higher in future years. But I think the risk is worth the reward here for UiPath stock. If the company can withstand this competition, utilize artificial intelligence, and increase the value of its services rather than being substituted with these newer services, then UiPath has a great market opportunity ahead. Businesses are looking to increase automation, increase AI combined with automation to simplify their processes and reduce their reliance on labor. So, to update my recommendation of UiPath stock, I'm going to reiterate my buy rating today, March 5th, 2025. I'm going to say I still think the stock is a buy, even though this stock comes with higher than usual risk because of the potential of being a value trap. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.